Hearing Toll Brothers CEO talk about how homebuyers are on the sidelines, I guess we should expect that given rising rates, but how long will that last?
That's the big question. And for companies like Toll, it's a question is you have to feed the beast, which is bring in new selling communities. They want to get by the end of next year to 380 from like 330. Yet new orders were down 56% in the reported quarter, and their backlog was down 7%. And that really is the engine that drives construction and home deliveries. So we're going to see a much slower year ahead for Toll and many of the home builders.
But as you point out in your note, if you look across the United States right now, there are still certain pockets that are seeing strength. Is that right?
A little bit of strength, and that's mostly in the South. And that's partly because of the appeal for employment, maybe for taxation. But for Toll, a significant part of their revenues come from the higher average selling prices of the Pacific region, and that was down 76%, partly because of lower demand and partly because they need to replenish selling communities and get them ready so they can sell more homes.
Yeah, because for the longest time, the issue was there was just a lack of inventory. Now you have more inventory coming online. Or I should pause there. Ken, are you hearing that construction is being delayed, halted, I guess half-made homes because we're just waiting to see when the buyer will come back in?
So builders are very good at kind of taking their foot off the pedal, and basically what drives the business is price and pace. Pace has slowed down significantly, as noted. So then they're going to create incentives, which is on pricing, to bring them back. For the National Association, Home Builders Association, over 35% of home builders are already doing price incentives.
Ken, here's a question for you. I track a lot of the international tour travel activity, and right now we're still not seeing that foreign tourists come back to the U.S. in the way that we saw pre-pandemic, right? I'm wondering how that's impacting home prices in some of the big cities like New York and Los Angeles that in the past have been very attractive to the Chinese, to the European high-income consumer.
It's a great question, and that Harvard University Joint Center of Housing points that immigration has fallen off significantly, really over the last 5 or 6 years. That's critical, really, as a component of new buyers, but also it's important for our U.S. economy as it relates to productivity and filling the low job participation rate.
Top stock in the home building space, which name do you think will do well in 2023?
We're right now neutral to negative. So one of the scenarios, and the stocks have done well really since early October. They're up anywhere from 12 to 18%. But it's the scenario that will the second half of calendar 23 be crossing the valley to a more optimistic, improving economy and the Fed not raising rates or cutting rates. Our view is that's a leap of faith, talking here December as we go into recession and a very weak first half of next year, i.e. for Toll Brothers, 56% down on net order value.
Wow. I guess we just have a couple of months or more to kind of get through this period and then perhaps some brighter days ahead. Ken, I learned a lot. Thank you for joining us today. That's Ken Leon from CFRA. Straight ahead, why my next guest is not discouraged by some